Hello everyone, welcome to the Trend Investor channel. A lot of you have been asking me on Twitter and also on YouTube, how are my charts different from yours? So whenever you try to take a chart and you plot it, it looks totally different from what I have. So the reason is because you're probably using an incorrect scale, or probably you are not using the log scale. So in today's video, we're going to look at how I use log scale, or why you should be using log scale, and we'll also be looking at what is the chart settings that you are using and how is it different from the log scale, and also a short comparison as to what is different from a log scale versus a linear scale, and why you should be switching to log scale starting today. Okay, so let's take a look at this video. So before moving ahead, don't forget to subscribe to this channel and don't forget to like this video as well. So let's take a look at first thing as to what is the scale that you're using. So in this screen, if you see here, the default setting that you're using on TradingView is probably linear scale, right? So if you're a first time user, or if you've been using and if you've not switched on this, so probably using linear scale even till date. And that's how your chart would look. Your chart would look like, for example, this is a Tata LXI chart. And since 2004, if you see, the price would be something like this. And then you would see a steep rise for the chart in the last year or last couple of years. So this is what is by default used in TradingView and in a lot of the platforms. But what does actually linear scale mean? So linear scale is nothing but a chart where you have an x-axis and a y-axis. The x-axis would have the time period, whereas the y-axis has the price. Now in the y-axis, in a linear chart, you would see the price is separated by equal points or equal values, however you call it. So in this case, if you see here, Tata LXI, every distance between each and every scale, if you see here, is between 1000, 2000, 1000 points, 2000, 3000, 4000, 5000, and that's how it's plotted, right? So every gap here, or every gap on the y-axis, the charting is based on a value or number of points, and that's always going to be fixed. So if you're looking at a linear chart, all our lives we have mostly been using linear charts. We never use log chart. Now let's take a look at what are the problems, right? Now there are a lot of problems with linear charting. For example, if you see here in this zone over here, you're not able to see what actually happened in this chart between 2007 to 2020. There's not really a price view that you can get when you look at a linear chart in the initial years, let's say when the price was listed initially, and then the stock has really risen up. And here we don't really get to see what has happened here. And here, when you look at this side over here, you are actually quite afraid, and you actually thinking this chart price has gone up so much. If I enter now, what will happen to the my trade, or what will happen to my investment? So it gives you a sense of fear that the price has already risen so much, and you would not probably take an entry when you look at the chart, something like this. Okay, and also the reason here is because there's been a lot of action happening, and since the price has moved from 1000 to 10,000 in the last couple of years, here the price actually gets congested. So basically, don't see anything between 0 and 1000. You hardly see anything that's happened in the charting, right? And also, you cannot really draw a trend line, or you cannot really try to see any channels or any trend lines. You literally cannot do price analysis, or you cannot do any charting looking at a linear chart, and that's the major problem with linear charts. So also, if you take the example of Bitcoin here back in 2020, even just last couple of years back, since there was a phenomenal move, there was a drastic move in the entire price of Bitcoin, you cannot really see what has happened here, right? And it's very difficult to analyze a chart and say what happened in that time, and you also cannot draw trend lines. And all this is because of the equal spacing that we have on the y-axis in a linear chart, and that's why linear charting is a big problem, especially when looking at long-term trends, right? So what's the solution? The solution is using a log chart. Now I've taken the Tata LXI same chart over here, and I've shown you a linear chart, and I've shown you the log scale here, right? Now if you take a look at these two, it's very clear what happened here in the log chart, right? So we had a massive consolidation, and then we had a breakout. Again, we had a massive consolidation. Again, we had a breakout. Now that's what you want to look at when you look at any price chart in TradingView or in Zerodha or any trading platform, right? And always switch to log chart. This is how you see it, right? So if you want to switch on the top, on the right hand side of your screen, right at the bottom, you'll see that log. Just click on that, and you can enable the log settings. So but how is a log chart different from linear chart, right? You might ask that. And log chart, basically on the y-axis, it doesn't plot it based on equal value or equal points. Rather, what it does is it tries to plot it based on equal percentage move. Now here, if you see in the Tata Elxsi chart, so for example 90 to 28 would be a similar percentage move compared to what you see here. For example 950 to 1450. Now that is a 50 percentage move, whereas here also it's almost similar to a 50 percentage move. So on the y-axis here, each and every value that is plotted is almost 50% away from the previous value. For example, 11,000 to 16,000 is almost close to 45 to 50% move. And when you get this percentage wise plotting on the y-axis, it makes it much more easier to read, because a 50% move from 13 to 19 is also a 50% move from 11,000 to 16,000. So if you invest here at 13, you're almost going to get a similar kind of returns at 19, or if you invest 11,000, you're almost going to get a similar kind of returns when it reaches 16,000. So in both cases, you're going to see a 50% move, right? And that's how the y-axis is plotted, and that's the primary reason why a log scale looks much better and it gives you a better perspective compared to what a linear charting gives, right? And you also can see the trends are very clear. You can draw clear trend lines, you can draw clear horizontal lines, you can plot a trend line, and here if you look, the price has been steadily moving up, whereas here if you see, it looks like this price had some kind of a steroid and the stock just went up in the last 1 year or so. No, so this is the primary difference between a log and a linear charting, and that's the definition of log chart, right? Plotting it percentage wise on the y-axis, whereas a linear chart has it plotted based on the values. So the next big question is when to use what, right? So a lot of us have swing traders, intraday traders, position traders, and investors, right? Now it doesn't matter if you use log chart always, because in the short term period, or if you're looking at a very short term period, it really doesn't matter whether you use a log scale or linear scale, because the moves are not going to be that big and it will not really affect your charting as much, right? So here in this case, I've taken the last few months of Tata Elxsi and I've taken log scale plus linear scale. Now if you look here, in the both cases, the chart exactly looks similar, right? It looks almost the same, and the reason is because the moves have been not that much. The stock price has not moved like 10,000 times or whatever it is. It has moved probably almost, probably a few percentage points, 20 to 30%, not more than that. But if you're using long-term charts, right? If you're using long-term charts for investing especially, and if a stock has moved up, let's say 5 times, 10 times, or even more than that, or even in the short term time period, if a stock has moved, let's say 3x, 4x, then you have to switch to log charts. But in the long term charts, definitely you should be switching to log charts because of this, what you see here. Right now, if you look at this right side, or sorry, the left side, I'm using a log chart, and the right side, I'm using linear chart. Right, in the left side, which is the log chart, you can clearly see that the trend is very clear. I can clearly draw channels, I can clearly draw trend lines, I can do a proper analysis of charts, right? And that's what you need when you're doing charting. And if you want to really become a professional trader or a charting expert, then you need to switch to log charts, especially in the long term. And if you look here, it looks horrible, right? So it looks horrible. The chart doesn't look really great, and a lot of big traders on Twitter are also doing this mistake. So you should not be doing this mistake, right? So since there is not much difference between a log chart and linear chart in the short time period, and you have to use log charts on the long time period, so it's always good to use log charts. It doesn't really make a big difference in the short term. So enable the log chart today and try to use log charts always in your trading view settings. Okay, so that you can draw clear primary trend lines, you can draw good channels, you can draw charts like how I do, and so that you're also on the same page with me. So today, if you've learned this and it was very useful, go ahead and make that switch today to log charts, and go and tell your friends that you do know charting and you do know what is a log chart and a linear chart, and you can also do proper analysis, proper trend lines, proper channels, just like I do. So yeah, that's it for today. I'll leave you here. Take care, trade safe, and stay safe. I'll see you in another video. Until then, bye bye.